All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. The fun Friday with lack of data, but full of economic developments, geopolitical developments, I should say. Politics, geopolitics, tech, that's what's driving right now the market. Data, economic data, unfortunately lacking. So, what I thought I'm going to do today, I thought I'm going to just do a little quick update on what's happening with the cryptos, because everybody kind of shifted away from the cryptos, but in general, those are moving. So, look, before we go any further, as always, let's quickly have a read through our risk disclaimers. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, like I said, the crypto world is the one that kind of is pushed a little bit to the side. So yeah, I thought I'm gonna pick up on that. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, and we're not done yet. Also, a quick webinar update. Basically, I'm going to do a webinar at the end of October. So if you have time, please join. It's a live event on the 30th of October. So you can find the link in the description of this video. The webinar is on Bollinger bands. Well, it's basically part of the series that I'm doing right now. And it's like a third episode that I'm going to do this one. The first one was on MACD, the second one was on RSI, and what I thought I'm going to do on the Bollinger Band. So I think it's going to be useful. I'm also going to do some live trades on our demo account. So basically, just to kind of put it all in practice. You know, theory is one thing, but to see if in practice if it works or not, well, that's another thing. So, ladies and gentlemen, like I said, join in. You can find the details in the description of this video. So yeah, feel free. And you can always reach out to me on LinkedIn if you wish for more details. Ladies and gentlemen, so, okay, economic calendar, probably that's not something that I'm going to pick up on because I picked up on this one during my Markets Talk webinar this morning. So you can check it out right here on our YouTube page. But straight away into crypto. Look, last week, or should I say, actually, sorry, not last week. On Monday this week, we went for a new all-time high. Last week, we went for an all-time high, but then on Monday, we overshot that. But what's interesting, and this is what I keep on saying to everybody, and this is one of those strategies that I follow, and to be honest, I wouldn't say it works 100%. It works somewhere maybe like 80% of the time. Still good. But what I'm saying is that whenever we go for an all-time high, I always keep an eye on the next day, because if we do go for another all-time high, like in this case here on Friday, last Friday we created a new all-time high, went higher, we tested it, and then I say that look, if we go on to next time during the next trading session, we go for an all-time high, but we struggle to close the body of the daily candle is struggling to close above the that already at that time the previous all-time high right here. That to me is a bearish indication. And look at this, we are drifting to the downside a little bit. I'm not calling this as a major sell-off or something. No, I'm just saying that there is a possibility for a reversal. So this is something that you need to keep an eye on the current markets in terms of current equity markets, indices. We're having similar happenings, similar moves in commodities as well. You know, there are a few commodities right now which are rallying, so you can keep an eye on those and apply basically the same logic. But basically, whenever we go and we create a new all-time high, and then next time we go and surpass that all-time high, but then we fail to close below the previous all-time high. So yeah, that's to me is, like I said, that to me is a worrying sign. You can see that this one, right, when we reached an all-time high in August, then we retraced back down. So basically, it was a good example here as well. So I'll show you. This was that previous all-time high in July. We went in August, created a new all-time high, but then if we look at the The weekly, even look at this, the weekly candles here, the monthly candles, we struggled to remain. Especially on the monthly. Monthly is a good one. Monthly is actually the most probably reputable chart. So whatever happens structure wise on the monthly, that's kind of, that's what you follow. It because it has bigger significance and it takes more time to build up something. So that's why the monthly chart carries a little bit more credibility than the shorter time frames. Now, what I can say here is that look, we did have a great move here, and like I said, going back to my daily, we did have a great move. We failed to close on the monthly above this, so now we're seeing something similar. So this is when we went for a new all-time high. This is the August high, previous highest point. We cleared that one in October now. So if we take a look at the monthly chart, so for now we're struggling to remain above that August high. So that's for me another bearish indication. Not to mention the daily. So we can do, like I said, the same. We can do the same thing on the daily. Now, look, guys, I'm not saying that suddenly I'm becoming very, very bearish or something. No, it's just for you to consider a possible retracement. So we're now seeing that retracement, and if I apply my beloved Fibonacci retracement, if I'll draw it from this low here, the lowest point of September, to the current highest point of October, because we're not done with October yet. So you'll see that we did the 23.6 right here, we dropped below it, and then we went for that 38.2. So basically we're very close. So we came close to testing that area, and in a way we could say now we already did the whole thing. We did the whole retracement, so maybe it's time for a bit of a push back up. But look, how do you know that? You don't know. So in general, for now, I'm being very careful. We're below the 23.6, but we're still above the 38.2. So this whole area for me is kind of a dead one, so I'm not really touching anything. But if we start falling below the 38.2 here on the Fibonacci retracement, 38.2%. I mean, normally should be, it shows the percent here. So 38.2%, if we do drop below that, yep, I'm leaning towards the 50%, which is basically not far from that 118,000, which I talked about previously. But this one actually, probably this one's closer to 117 and a half zone. So that's the 50% here on the Fibonacci retracement. Again, good target, good level, but certainly we need to be a little bit more on the careful side for now. So if you missed this retracement, look, that's fine. So I think that it's better not to play around too much here. If we do fall below the 38.2, then yes, we can start targeting the 50. So yeah, that's my game plan on Bitcoin. Again, the cryptos right now are losing ground a little bit because we can see that the US dollar index is picking up pace, and let me show you what I'm talking about. So we had a good rally here lately on the US dollar. I'm not saying that I'm a strong bull right now on the US dollar. I talked about this in my morning webinar today, but what I'm basically considering is a little bit of a larger correction to the upside for DXY, for the US dollar index, meaning that this could add pressure on cryptos like Bitcoin, Bitcoin Cash, Ripple, Ethereum, Litecoin, and blah blah blah, right? Because they're if they're denominated in the US dollar. Of course, we have BTC Euro, we have BTC GBP, So again, but of course, the most popular, the most traded is the BTC USD, the most quoted. So yeah, that's my game plan right now on Bitcoin. Look, I'm gonna get more comfortable with the upside probably if we do push above the highest point of August. Not the current all-time high. I will already start considering higher levels if we do push above the highest point of August, and then yes, I'll go for the all-time high, which is around here near the 126,230. And if we clear that one, yes, I mean it opens the door to that maybe 130,000. Well, let's see. Let's not rush into conclusions yet. For now, there is still a chance for a larger correction back down. Bitcoin Cash. Now, Bitcoin Cash is loving that 600 level and it's struggling with it. So today we're once again testing that 600, just a little bit above that 600, and we are pushing we are pushing back down. So in a way, the 600 level on Bitcoin Cash here, BitBCH USD, is a very important level. So if we do clear that, I'll go for some higher levels. Because at the same time, we could, break this downside line right here as well, and kind of add more strength to the whole bullish case here. But yeah, but the bullish case, like I said, for me will come on a break above the 600 level and this downside line, and then we'll kind of go from there. For the downside on this one, I would like to see a drop below the 575 territory, somewhere around here. At the same time, it would fall below the 50-day EMA, below the 20-day SMA on the inside the Bollinger Band here, and yeah, this could open the door to some lower areas. Ripple is struggling with that 3 level. I mean, it's kind of oscillating, I would say, around that 3 level, but still, no good, no good. Because for me to get comfortable with the downside, a drop below this hurdle is required. A drop below the 2.69, kind of 2.70 zone, I would say, roughly. Let's round it up. That could be the better option here for the downside. For the upside, pretty straightforward. A push above this downside line is required for me, because again, anything up until then could be just a random walk here to because also don't forget, it seems like we're forming a descending triangle pattern, which according to all the TA rules, tends to break to the downside. However, look, it doesn't happen all the time, because, like, I'll show you an example here. For example, DXY, there we go. We are breaking the upper side. So I always say wait for the clearance, wait for that break of one of the sides of that triangle, and then you could, consider the next short-term directional move. Ethereum is messed up a little bit. I don't like it, but on the other hand, look, it pushed above this downside line. It tested the 4,750 zone right here, and then retraced back down. So we're currently resting on the 20-day SMA, on the 50-day EMA as well. And look, if we can get a nice rebound from it, wonderful. We could go back up here. But the problem is that we're very close to this key area of support, which is roughly between the 4,235.75 levels right here. So this highlighted zone, if we get a nice clearance of that one, I'll go for some lower levels. Litecoin, also interesting one, very, very interesting. I do like Litecoin, honestly. Litecoin is, to me, something is like extraordinary. I mean, it's very technical, and I love it. I love when something like that is happening. So there we go. We're getting the move where we got the breakout, we got the move higher. We're going for that 134 territory right here, roughly. If that gets cleared, ladies and gentlemen, I'm gonna go for some higher levels. I mean, look, we do have some. These are not all-time highs. All-time highs are back here, back at around 400, something like above 400. But we're just, let's say, if we consider the fact that Litecoin could travel back to these levels, back to these all-time highs, then we're relatively cheap. So yeah, keep that in mind. And so, ladies and gentlemen, for now, like I said, I'm watching this 134 territory. If we get a nice clearance of that one, I'm going to go to the upside. Dogecoin. Dogecoin is, yep, it's also at a very interesting spot. Look, it's forming something of a rising wedge, which tends to be a bearish indication. However, look, a break of the lower side is needed, in order to consider that bearish kind of scenario. While we remain inside the pattern, it could still drift higher. It could remain, it could still move sideways here, up and down, and with a trajectory to the upside because the pattern is basically pointing higher a little bit, but it's somewhat of a bearish pattern. So, but again, a break through the lower side is needed in order to go lower, to get comfortable with the downside. Polkadot. Polkadot is, yes, it's pushing nicely back up here. Polkadot is, still loving that 4 level. We still remain above it. We're trying to push higher here. So let's see if we can stay above this 4.10 zone. If we can, great. I'm gonna go. In general, to be honest, looking at this daily chart, I would actually prefer to wait for a push above the above the 200-day EMA. If we can get that push above the 4.24, then yes, great. I'm going to go to the upside. And finally, Tron. Look, Tron, I do like Tron, but at the moment it's not really doing much. So yeah, I'm waiting for a clearance through one of the sides here, either a push above the 0.3474 or a drop below the 0.33 territory right there. While we remain in between these two levels, I'm just observing the price action. So that's my game plan, ladies and gentlemen. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. Honestly, please do subscribe if you don't want to miss these videos that when they come out. And as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you in my next little video update. Bye for now.